You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Okay, the last session for today is with the non-exchange but important participants in our industry. Please welcome from OCC, Amy Lawson, from OIC, Frank Tirado, from the SIFMA Options Committee, Paul Jiganti, and Jim Toes from the Security Traders Association as they take on the topic of growing and strengthening the options markets.
Guess I'm here. Well, thanks everybody for coming out. I've been elected to be first today. I not only chair the SIFMA Options Committee, I'm business development at IMC. So when I was trying to put together my notes for today, I kept thinking, I'm sick of listening to guys like me come up here every panel and tell you what's wrong with the options industry, but I can't help myself. So I'm gonna give you what both really primarily what SIFMA looks at, what's probably can be improved, and maybe put a little of my own commentary in there time to time. 15 exchanges, an OR fee that pays a good chunk of the cost of running an exchange. That really we see as an issue. We see it as something that can be changed. At SIFMA, we've had meetings with the folks on the Hill, at the SEC, and it looks like we're going to get some progress. What we're advocating for is an eat what you kill when it comes to options regulatory fee, which is one fee, you collect it from retail on the exchange that you trade on, no full transparency on how it's spent, how it's collected, and how much is actually in the pool. Second would be there are more exchanges than market makers in a lot of products. That just, if you ever heard that 20 years ago, you know that it feels wrong. Now, we don't have a clear way to make that better. We're just hoping that maybe some of the exchange families that we just heard up here will do the right thing and maybe shut down a few. There are 5 exchanges with less than 1.5% or 2% of market share. What we really should be worried about mostly is, and not mostly, but a big chunk of it is what we heard about earlier today, the camp tax. The camp proposal that is getting wound into today's text. As the folks earlier today mentioned, go to your congressman, make sure this does not happen. Then you have insidious things that hurt liquidity, like leverage ratios. Again, another lobbying effort. The industry is doing a great job behind OCC, and SIBO have been really putting together quite an effort in order to answer that. 1 million strikes. Another thing that we're looking at. There are 1 million strikes out there for liquidity providers to disperse their liquidity across 15 exchanges. Not probably a way that you would really design it for today. Design it for if you were going to build it today. And another one that probably doesn't have an answer is we all have to be cognizant that the majority of the liquidity is bunched up in the top 10 or 15 names, and the rest of the group has some challenges. So it's not all bad, So these are things, people are on it. Different parts of the industry are on trying to answer it. But what I was really thinking about was what's going to make the industry better over the next period of time, the next 5 years. And those little brats, the millennials, came up here and stole my stuff. Everything that they said was stuff I was excited about talking about because they're doing such a good job of my generation of options traders were the wonky guys that liked and gals that liked the math part of it, We understood vega, deltas. All the Greeks made sense. And now, if we're going to grow it to a broader audience and make it simpler and really do what it's supposed to do, is you don't start with the stuff underneath the engine. You say, do you want to drive the car? Do you want to go someplace? And that's where I think that these guys have really done a great job. All of the traditional online brokerage firms are doing it, and then you have the one-offs like who are they? Vest, the affiliate of SIBO, which packages these things up. Halo, which really does about the same thing. All these things, even if they don't directly use options themselves, the people that are packaging them will likely go into the options markets to hedge them. So it just gets people used to looking at the payout, not looking at the Greeks. And I think those are the kind of things that will get us more business in the long run. It's not none of this is going to be tomorrow we're going to turn on we're going to look at my OCC download of the volumes and see 25 million unless we have a big move. The regular 25 million is going to be a few years out.
Hi, I'm Amy Lawson from OCC, and I've spent most of my career at OCC either working on systems, risk management, and business analysis. And right now my team works with the exchanges on product development and internally requirements for risk management systems and other things. I don't really expect you to know a whole lot about OCC or about me, but generally that's how it should be. We're really kind of the backbone, the silent partner of the options industry, and we're working to try and make sure that this industry expands, but kind of behind the scenes. And some of the things that we strive to provide confidence in the marketplace. So, reliable systems and reliable risk management so there's not any hiccups. And we are working to build resiliency and to ensure that the marketplace is going to, be here for a long time. So none of my stuff is that exciting. I'll try and get through it quickly so that you can get on to your cocktails, but it is important to know that we got your back. So we're working right now to upgrade our technology to make sure that we have flexible systems, to support straight-through processing, to support new products, to support real-time risk management, and a 24/7 marketplace. We also want to make sure that our costs will be competitive and we'll be able to reduce costs in the future, and that requires a flexible, good new technology base. We also have, we work quite a bit on risk management, and lately that's meant to make sure that we're aware of the capital issues that are out in the industry and to make sure that we're providing services and advocacy for the firms on the capital front. Some of the things we're doing on that front is, maybe you've heard, just in the last week we announced a partnership with Equilend Clearing Services that provides a platform for trading securities finance, and that should help bring securities finance to a CCP so that capital can be lowered in the securities finance world based on new regulations that the bilateral security finance markets are going to have increased capital requirements. We also are working on CMTA project with SIFMA and others in the industry to make sure that we can have as low of capital, our clearing fund as small as we can when there's risk to the industry, risk to OCC of CMTA trades and the executor model. We're looking to help solve that problem. And also on the legal and regulatory front, OCC strives to be proactive to make sure that we're on top of some of the legal and regulatory changes that have come at the industry in the last few years. We've worked with the Department of Labor, the IRS, and the regulators in Congress, and always trying to be ahead and make sure that some of the unintended consequences of some of the new regulations don't negatively impact our industry. So I guess in closing, I would just say from, being on top of the CCA to, collateral enhancement and our systems, we're trying to, be there and be the strong backbone to the industry. And we're always welcome to new ideas on how we can help. And I'll turn it over to Jim.
That's great. No, thank you. So we have a clock up here that we're supposed to follow and supposed to flash, and it hasn't moved. It still says 39 minutes, so I
think
everyone's got it.
Seconds.
Oh, that's seconds? Okay,
Yeah,
good.
so
Then
you're almost
okay,
done.
I'm done. I'm almost done. But you may want to hit the start button on that. Listen, they were. I thought the morning panels were all were good. I think the DC part was good, and I think that there were definitely comments or nuggets of information on the first two panels that were very consistent with overarching themes that we are hearing when we go down to DC for what's coming down the road here, and some of the things I think are things that we should be optimistic about. All right, so what do I mean by that? Well, first of all, Congressman Reed, I thought was very good on the subject matter. It seemed like I think we all have seen politicians come up and maybe just kind of talk, and they go through their talking points and then they get off the stage. He was very comfortable, obviously, having a conversation in front of a room of experts, of practitioners, and he seemed very comfortable answering the questions, and it was much more of a dialogue, and that's very encouraging when you have someone in that position who has oversight of this industry, that he is familiar and he understands it, and it's a good testament, I think, to all the work that is being done by OIC and OCC in helping, and everybody needs to just kind of help him educate on this subject matter. There was something that he brought up that kind of stuck in my mind a little bit more, is that he didn't, he admitted that he hadn't had a chance to meet the new incoming SEC chairman, Jay Clayton, but yet he did touch on some of the remarks that I haven't met with Jay Clayton either yet. But through the people that we've spoken to that interviewed him when he went through the Senate approval process, there were two things that came up that opinions and ideas that Commissioner Clayton, Chair Clayton now has. One is there is this concern around liquidity in the marketplace. There is concern. We've heard him talk about available liquidity in the marketplace. Now, what that really means, is he talking about liquidity in equity markets or fixed income or options? Not to be determined, but the fact that you have a regulator coming in here who is concerned about liquidity in the marketplace is just enough, is a good starting point, because I do think that seems like it is a common concern that we are hearing from customers as they become large asset managers having a hard time moving their positions. We hear it from, in the options here, we talk about the number of strike prices and displayed liquidity. So I do think that theme of an overarching concern around liquidity in our marketplace is something that we will be hearing more about. The second part that I think is another friendly thing that we should be looking for is obviously we hear a lot around capital formation and IPOs, and obviously if you're trading options, they need to be trading off something. So the IPO calendar continues to be, yes, there's been some improvements on it. We've heard a lot about the Jobs Act, and it was an incremental piece of legislation that enabled some companies to go public easier, but it has not. They're not done trying to fix this. It's still a problem. The amount of companies that are going public is an issue. I think we have 50 year to date, and while that's better than last year, it's not better by a lot, and it's certainly not better than what the historical norm is on this. So I think the overarching themes that we've been hearing that we all should have some signs of optimism and hope around, again, is one, there's concerns around available liquidity, not just in options, but in all markets. So getting a regulatory and legislative regime in to try to improve liquidity is a good thing for the people in this room. And then the second thing, obviously, is around capital formation and trying to get companies to go public, which obviously, you need here as product to trade your options off of. So I think those are kind of the two solid nuggets that I saw come through on the morning program.
Thank you, Jim. My name is Frank Tirado. I'm Vice President of the Options Industry Council, and thank you for your attention. Paul, I just want to say that the sun will come up tomorrow. I am here to say that I'm excited to talk to you about what the Options Industry Council has been doing for the last 25 years. Some of you have been very aware that the Options Industry Council has started its initiatives in 1992 and continues to this day. Our focus is dedicated to its mission, right? We are focused at providing options education to individual investors, advisors, and institutional investors. It aligns really well also with the OCC's mission as well to focus on thought leadership and education. And for 25 years, we've been dedicated to that mission. Let me update you on what we've been doing recently, because I think it's important for you to know some of the initiatives to help grow your education strategy or grow your business strategy as well. I'll start with individual investors. Individual investor initiatives pretty much are led by my colleague Joe Burgoyne, who has basically grew this whole initiative focused on individual investors. And as institutional investors, who doesn't like retail order flow? And one of the things that we have started this year is an entirely new digital ad campaign. And the focus is options, the next great investing adventure. That campaign launched in March. We're excited about that. It's focused on digital education. We've produced 17 different videos, of which 3 have launched: covered call, protective put, and long call. We will launch a total of 17 animated videos targeted to the next generation of investors. Most of you met some of the profiles in the previous panel discussion. And so that is key. Also, our digital education efforts with our webinar program, our online summits, also are done on a monthly basis and are extremely popular with, obviously, the investing public, but also individual investors. The last thing I'll say as well is that these are not our videos. These are the industry's videos. And we do have a partnership program that allows you to obtain these very high quality animated videos that will summarize 17 different strategies. Over the next year, we'll be launching those out. We have a simple content sharing agreement. We make those assets available to you. Approach myself or Joe, anyone on the OIC team, should you be interested in some of these videos. If you go to our booth, they'll be displayed as well. They're on a reel, so you'll see that, and you'll see what the videos are like. But again, you'll see that the design, you'll see that the content, you'll see that the information is really targeted to the next gen trader that we hope to attract. The next interesting topic is that of financial advisors. We are extremely excited about our partnership with Cerulli Associates. And tomorrow, you've got to attend the presentation by Emily Sweet, and where we're launching our study, how financial advisors use and think about options, exchange-listed options. The educational efforts are led by Eric Kott. Please, if you don't know Eric and interested in the financial advisor, he's here at our booth and can help you with any business initiative that you may have that we can assist with education. But that study is unique in that this is the first time we've partnered with Cerulli Associates. Cerulli is a consultancy as well as a research firm, but is the platinum standard regarding financial advisor research. Get your hands on that study when it launches tomorrow. Again, this is not our study, but the industry study. And this is one thing that we can partner together to kind of help grow the business. If you know asset managers, if you know financial advisors, send the document to them. This is a tangible way where we can help grow the business. You'll see that the study will reveal a lot of interesting insights, If you go on to our booth, you'll get this really slick infographic with the major facts of the study to give you an idea of the potential for the growth of options within the financial advisor space. Another major thing that is, again, a first-time effort, very innovative effort, is our work with the Investment Management Consulting Association, IMCA. And so for the first time, OIC will team up with IMCA to put together an option certificate. One of the key findings of the study was this issue of confidence, is the issue of advisors needing a bit more training and comfort level with options. So what we're trying to do is tie this option certificate with a professional organization like IMCA in order to kind of provide that extra certification or certificate for the financial advisor community. That is being worked on now. We hope to launch that particular effort in Q4, but you combine the facts of the study and you combine a solution to one of those key findings where what keeps financial advisors away from options, we think we have a good combination going into the new year. So the last segment that we serve is the institutional investor segment, which is complex, large, and Paul, you made a very good point that not only millennials need for the gibberish to stop, institutional investors, right? Some of you have known, have probably presented before, pension funds, the police and fire pension funds, and you see these boards, that the composition, some of the composition of these boards are career police and fire people. So we need to simplify the language. We need to bring out the benefits of our product and our business to individuals. And that's one thing that the Options Industry Council is focused on as well, to focus on institutional investors in providing very practical education for that segment. Let me give you an example of how Joe Burgoyne, myself, and as well as Kevin Baldwin worked together to kind of connect the dots for a couple of organizations. We have a very specific effort to the institutional community focused on the CFA Institute. Why CFA? It's one of the most recognized credentials in the world. There's 135,000 CFAs worldwide and another 200,000 sitting for the exam. And their value system, right, as an entity aligned with our value system, which they have a high regard for education. And so Joe came up with this wonderful idea to create an option-centric event for local chapters. So we pitched a local chapter in Philly. We had sweat beads on our forehead thinking who's going to come out. It was a big hit. We pitched it to Chicago. We had another great event. We pitched it to San Francisco, and we'll be in New York in the fall. And so we're trying to create a systemic strategy to reach this highly qualified population about exchange-listed options. We connected that effort with another significant effort in the institutional space, which was, some of you are aware that in April, Morningstar launched its first ever option writing category, which is very big for our industry. And if you haven't yet checked that out, Google it now, Morningstar option writing category. You'll get the list of money managers on that list. But we sought out the individual heading up that whole project. We invited him to the CFA initiative. He was a keynote speaker at these initiatives, so we're connecting the dots, and that's just one example how we're working within the institutional space. In closing, I want to say that the OIC's efforts are your efforts. Our assets and the things that we do are your assets, and we are extremely excited about partnering with you for the next 25 years as we celebrate our 25th year anniversary in September. We just hope that we can partner with you and your organizations so that we can continue the important task, right, of providing education to individual investors, financial advisors, and institutional investors. And with that, I think we can have a drink.
Well,
There's one question
Oh, one
out
question,
here.
okay.
What was the question?
which is directed at OCC, whether OCC will provide guidance on the reporting under MiFID II for investment firms, such as best execution and risk controls. I'm not really positive of the answer of this, but I'm guessing the answer is no. But whoever asks the question, come up to me afterwards and I'll grab your business card and make sure I get the absolute right answer. But the reason why I think the answer is no is because OCC doesn't deal directly with the investment firm's risk management. That's generally, we're not a designated regulatory authority. That's generally either FINRA or exchange rules that handle those sort of things, but there might be something I don't know about this, so please come up to me, or if anyone in the audience from OCC knows the answer to that question, feel free to pop up.
On the best export, I don't think there's a role really for any
Right.
place. Here in the States, we have enough best ex right now in the States. Being able to, quantify, capture, and publish best ex stats in Europe. So if you're a European manager and you're executing over there, and now you have to unbundle your research from your execution and then prove that you're getting the best execution for what you're paying for. You're the one who's in a tough spot on this, because right now you're not collecting anything. There's no 605, 606 reporting. There's nothing around best ex reporting in Europe around these, at least nothing that's standardized to the point that's going to satisfy the rules. So they're kind of starting, in the gates, and here in the States, whether it's the options or equities, we're already. It's the only part of MiFID II where we're ahead of the curve.
And I think that's the end of our panel, right?
Okay.
Thanks.
Very good.
All right, thank you, guys. Thank you very much.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.